Are you struggling to understand Stacey Burke's trading system? Overwhelmed by all the abbreviations, concepts, and elements? I hear you. I'm a Stacey Burke style trader that enhanced the Stacey Burke system with some of his own elements. And in this video, I will go through his whole trading system as I understand it. I'm trading the system now for more than 4 years full time, and I enhanced it with a couple of elements, but in this video I will mainly go through the basics, really discuss every little element, every setup, everything you need to know, everything in this one video. I watched so many videos of him and I brought everything together in my own playbook, and here in this video I will give you the summary of it, so stay tuned. This might help you going forward. So first of all, overview. Stacey Burke style trading. What is it? What are the key influencers? Where did he take all his ideas from? And what are the key elements? So I don't know if this is everything, but this is what I took from it and what I understand. I think he has a lot of influencers and a lot of elements, and he also changes his elements from time to time. But this is, I guess, a good summary. So let's start with the influencers. So the major influencers, I think, he took his system from start with Tony Crable. Tony Crable is a legend. He defined the open range concept, and this open range concept kind of goes through all of his trading system, especially in the weekly cycle. So you always start the session, the day, the week. You wait for the open range to trade, and then you think from the open range. What are we doing to the extremes of the open range? Are we going in a range expansion, or is it failing and reversing to the other side? That's one of the major elements, and it also defines the weekly cycle. Then George Douglas Taylor, he defined the 3-day cycle. He doesn't like to talk about this much anymore because it's pretty complex and he gets a lot of questions around it, so he simplified it significantly. I will still go into that because the 3-day cycle is pretty important because it always shows trapped traders, false break at the high or low of the week. We will come to that, and then you have a wave kind of function from there on and have an idea what might happen the next days. Then Schabacker, Edwards and McGee, Peter Brand, he talks about those a lot. Classical charting, price is always in a box, and especially if you get a nice consolidating pattern, you look at breakouts of these boxes and look at measured moves, range expansions. He doesn't go much deeper into specific chart patterns, but this is something he takes a lot and looks at, especially all the range expansions. Then Mauro, he never talks about him, but the beat the market maker concept is pretty similar. Not sure who takes what from whom, but this is kind of the 3-day breakout traders logic. So Steve Mauro talks about it a lot. Market maker manipulation along the week. 3 pushes out of the open range, 3 times breakout traders on one side. Then from level 3 working the high and then collapsing back down and taking the liquidity below. This is something that Stacey looks at very closely in a very similar way, at least as Steve Mauro. Then Bill Lipschutz, just more a mindset thing. He quotes him a lot. If most traders would learn to sit on their hands 50% of the time, they would make a lot more money. That means really be patient, wait for your setups, don't push it, wait for late in the session, wait until everything is confirmed and then take your trade. So don't chase anything and really be very aware of the behavior of the trader. So what are the key elements out of these influencers that we will discuss in the video? So one is trap traders. 3-day cycle, day count. So we always look for trap traders on one side of The range might be session, day, week, whatever, and then from there we build our thesis. Then we look at overextended markets, as we just discussed. 3 days of longs, 3 days of shorts. So the longer we push into one direction, the higher the probability of a rollover. Not necessarily, we will come to that, but we start to look for that. Then coils, inside day signals, working higher or low. Any type of coil is interesting because out of a coil you typically get measured moves and explosive moves and potentially nice trades. Then break in structure reversals, as I call it. So that's the first red day, first green day signals. So everything moves in threes for him, pump and dump. So it's a pump day, consolidation with the first red day, dump. It's a lot of discussions around those. They fail a lot. I will show you how to trade those. Then he always talks about where is the money. So you look, especially in the chart, where is the key liquidity zones? Who is in the money? Who is underwater? So who's getting punished and where is price going to take profits of profitable traders? Always good to have that in mind. Then other time frame traders. He talks about that a lot. He doesn't give you a lot of methodology around it, how to track it, but he talks about it that you always need to be sure what the other time frame traders are doing, and if they are pushing a move out of a box or back into one, then follow them. Wait until they show their hand and then follow them. That could be on the monthly, on the weekly, on the daily. We will come to that. Then only 2 types of trades. He talks about this a lot. I would disagree also for his system, because he says always every trade is a pump and dump or a dump and pump. Maybe if you consider this for many different time frames, then it's true again. But there's of course also continuation trades, parabolic continuations. That's not a pump and dump. It's a pump, consolidation, pump again. You could argue then you have a little dump maybe beforehand, but sometimes you don't have even that. It might be just a parabolic channel and then it just blows off to the top. And he talks about it a lot, and especially also the low-hanging fruit trade. You could argue that's a little pump and dump then after a broken down market, for example. But I typically say we have 3 major categories. We will come to that. Then he says 12 candle window, only trade within the key trading hours. That's pretty clear. Setups, so really have your playbook. What setup are you hunting? So define your specific setups. The issue is that he doesn't really talk about what a setup really is a lot. So he talks about signals a lot, and the price needs to set up, but he doesn't give you a lot of templates or real setups to orient yourself. This is one of the key critiques I would have for him, but we will come to that also. Then look for asymmetrical risk reward. As we know, Peter Brand says this a lot, charts do not predict price. So we are not predicting anything, but we need to look at the chart to find out what's the 90-10 setups. I mean, he doesn't talk a lot about what 90-10 really means. Is this probability or is it risk reward? I don't know. It's more just an expression, I guess. I guess it's neither of those. But we really look at asymmetrical risk reward. So if we go for a high of week, low of week, high of day, low of day trade, we typically have a nice target in relation to our stop loss we are risking. Then only 3 things markets do. Always check on every time frame, breakout, reverse, or range. This is something where I enhanced the system a lot. I will come to that also a bit. I made this a very mechanical system that I, at the moment, rather trade predominantly and take all his elements as confluence. He does it the other way around. He takes, of course, his signals and takes that as confluence, but not in a very mechanical way. But I will show you how to use that. Then final element to mention is outside. So always trade from the levels and from the outside. If you're not outside, you're inside. So don't get trapped. Wait until price gets out of the Fugazi, and then you might get a continuation or a reversal at the extremes of the range. Everything else is not worth trading. That's his logic. So diving deeper in some of his elements. So one of the major approaches to market of him is the 3-day setups. So if you can count to 3, you can make a lot of money. That's what he's always saying. What does that really mean? And there's a lot of confusions around that. Day 1, day 2, day 3. What is it? There's a lot of different day 3s. It mainly means that a setup needs 3 days to set up. So you always have a day that starts the setup, then a second one, and a third one where you then take the trade typically. And there is a couple of variations of that, and most of that have a day count of 3 days. So let's go through them. The first one is 3 days of breakouts. So meaning we are hunting profitable traders and trap traders at the high. So we're looking at 3 days of previous high or low triggered without taking the other side. So then you are overextended, and this indicates you that a market is out of balance and there's a lot of liquidity of profitable trader stops below. Then you need to wait until it really turns, because the issue is that this is still front side typically, but after it turns to backside, then you might get a lot of space to the low for a nice trade. So 3 days of breakouts. That's day 1, day 2, day 3. Then 3-day cycle. That's trapped traders on one side of the week. So we are looking for a failed breakout of a previous day level at the high or the low of the week, trapping traders in the wrong direction. So breaking out and then losing the level again. This can also be on the next day. That's very important. And it is important that we are at the high or the low of the current week, nothing else. And that's it. Then he wants to have price to hit a daily level on the other side to confirm that. It's very simple. Many people are discussing around that. It's very, very simple. You have a breakout at the high of the current week. It fails, closes back inside on the same or the next day, and then hits a daily level on the other side that you really see it's rolling over. Then you might think about it as a trap on the high or the low of the week and trade away from that. We will come to that. Then 3 days in a box. Day 1, day 2, day 3. Again, 3 days in a row to be counted, coiling in a box. That can be inside days, that can be peak formation high, peak formation low, day 0, we will come to that, or even 3 days working into a level. So it's always coiling, consolidating, open interest, a lot of positions in the market, and once the market moves away from that or starts moving, then you get either a nasty fake out in one direction or a measured move. So you need to wait for it to show its hand, but then if it moves, it typically moves into 1, 2, or 3 range expansions out of this box. That's 3 days in a box. Then also first red day, first green day is also a 3-day setup. Day 1, day 2, day 3. Day 1 pump, day 2 consolidation, day 3 dump. Same with dump and pump. Day 1 dump, consolidation, pump. That's a 3-day setup. Day 1, day 2, day 3. So they're dragging in longs or shorts aggressively, followed by a consolidation, and then it reverses down, trapping traders at the high, taking out traders that are profitable at the low. So this is the logic, one of the core elements of his system. Then his day count, what he at the moment mainly uses at day count, is 3 days into the week. Monday, day 1, day 1, day 2, day 3, Wednesday, day 3, then Wednesday resets, day 1, day 2, day 3 into Friday. So that means day 1 starts trapping, day 2 is a trend day, typically expanding the range, day 3 you get either parabolic continuation or reversal. Same with Thursday, day 2, same as Friday, day 3 again. That's just a rough logic, nothing to be pushed. It's more or less an overlay over everything else. So if you have a setup, you check, is it a setup that also aligns with the day 2 trend, or is it a Wednesday or Friday, and we potentially look for a larger move. So That's it. That's the major elements that he uses as day counts. And for all these elements, we now have signal days. So let's look at those. So signal days. Let's go through all of these signal days. They are directly related to the 3-day setups we just discussed. And I will show you examples right away that you have a picture in mind. Signal days are how the previous day closed. So in the morning or in the evening, we will look at the charts and see if we get any of those signal days. So for example, 3 days of breakouts, long or short, meaning 3 days breaking previous day high or low without taking the other side. This means we have weak hands of profitable traders in the market, potentially. Because they are holding on, they are in deep profits, and in the first sign of weakness, they might bail out of their trades, and then it could roll over. But we need to be sure that we have a break in structure, because breakouts are front side first and foremost. So if it doesn't switch to backside, we don't short or long yet. So we're looking for a reversal pattern, and we are very careful because it could potentially be counter trend still. So how does that look like? Let's look at the chart. So looking at the charts, gold mid-April, and what you see here is a markup of Trend Predator Pro, my indicator, stripped off most of what it does just to highlight now the basic setup. So what you see here is the weekly separators. We have the weekly high and low and the daily high and low. That's all we need for the moment to see market structure. So let's look at 3 days of shorts. Here we have mid of this week, inside day also. So we can look at this also later. Breaking down. So that's the first day of shorts. Thursday, Friday, second day of shorts, Monday, third day of shorts. So you have 3 days of shorts and you have a clear downtrend, and we also breaking down from previous week's low. So what you're then looking at is you look at the trend line. So they're still pushing lower. That's front side. And then you see the next day breaks the trend line and is an inside day. So here an inside day pulling back down. It's a pump and dump setup on the day. We will come to that. So there is no long setup yet. But then coming into this day here, you have even an inside day then and 3 days of shorts. Here it's a different story. We have a fake out low. And what you also want to look at is the weekly level, of course. So this is your weekly breakdown level. So that's my multi-time frame logic. We will come to that also. So we always track the last high and low that was hit. So if we have a breakdown here, we will not long into this level from below. So we wait until we reclaim that level. And here now we have 1, 2, 3 backside of this move. You have an inside day fake out low, and then here coming back up, and then you have here coming from there a nice trading back against this push. And you typically look at stops then at these levels. So here is the money and here is the money, and this can be potential targets, or you then have of course to close end of the day. So that's 3 days of shorts. So next example, 3 days of longs. It's a week before the week we just said, so beginning of April. So let's look at this. We had here a strong coil inside day, and then it was pushing up, breaking out of this week here. First day of longs, second day of longs, third day of longs. Then you start to become interested, but what do? We look if we are front side or back side and pull the trend line. And you see here we are closing at the extremes on a Monday, and the Tuesday immediately breaks out, so there is no short yet. We also would look at the daily breakout level. So we are here in the daily breakout and going sideways. Potentially you could look at a short here, but it's pretty aggressive and pretty late in the session, but it's possible. Then you see you don't necessarily do that, because then you get a first red day already here. It's also, you have a combination of the signals already. Then the next day just go sideways as an inside day. So there is also, you see, there is no pump and dump setup that you have here, but we are just consolidating sideways. So there's still not a real setup. And then we have an inside day. So we have a 4 days of longs. So that's okay if it just extends one more. Then we have a first red day, then we have an inside day, and then it does another day to the long even and loses this level. So this is then 3 days of longs within the week in the weekly template. We will also look at that later. And then as it loses this level here, inside day, fake out high, that's a perfect trade back down. You need to be a bit careful here at the daily breakout level. Maybe that's already the level to look for. You're looking for liquidity, so you have stops below here and you have stops below there. So these are the targets you might take this trade to. So that's the logic of 3 days of longs. Signal day, day 2, day 3 trend. So after a day 1 3-day cycle, after a failed breakout at the high or the low of the current week, traders are trapped. And then the setup is that we trade away from that on a day 2 trend trade, and at a day 3 we look for a trend or reverse in a parabolic setup. So let's look at the chart how this might look like. So day 2, day 3 trend. So we always want to look for a day 1 3-day cycle first. What's the definition? False break, failed breakout at the high or the low of the current week. So let's take the same situation again, and you see also that these signal days all overlap, and you especially look for overlaps of those. So here you have a day 1. So breaking out of this daily level, failing, so have a fake out high, failed breakout at the high of the week. So this is your failed breakout. And this is the daily level on the other side. You break it here. So here it is confirmed. And then it comes back in and closes here. So you have a day 1 3-day cycle confirmed. It could even do another day 1 3-day cycle on the low here. It's an outside day, but then you have to watch this level here. So as soon as you're trading below this level, you are rather in this cycle. So this is then your day 2, your day 2 trend away from the trap traders at the high, and then you come into day 3, and you see here day 3 pump and dump template, another parabolic trend trade to the low. Day 1, day 2, day 3. That's how the logic goes. So here an example at the low of the week. So we are a bit earlier, mid-March now. Here you had a pretty strong consolidation sideways. So these consolidations typically do a fake out or a trend or away from the consolidations. Here you had on Monday a breakdown of the closing range of the week. We will also look at the weekly template later. So this is your breakdown level then for the moment. And it was, I think, even closing down here. So no false break at the low of the week yet, but it can also confirm that on the next day. So then the next day trades back up. Then this here becomes your day 1 3-day cycle. This pulls up, hits the other side of the range. That's day 2. The first move here was already then day 2 move, but it was not finally confirmed. But as you are here, you see again, it also does here a day one potentially 3-day cycle on the other side, but it never hits a daily level on this side. So there is a fake out high trading around here. So you need to be careful and watch this level here. That's your fake out level. And then in New York, here another stop hunt to the low, and then you get your day 3 trend trade to the high. And then you see it's even trending further on. So day 1, day 2, day 3. That's the logic to the other side. And here you see it might also fail on the next day. That's pretty important. And you always want to wait for a daily level on the other side to be hit to really be sure that the trend is reversing. Otherwise, as you see here, if you just have a fake out high and it doesn't hit a level on the other side, this might still turn around and go in this direction. So that's day 1 3-day cycle at the low of the week. Signal day is inside day and day 0. I brought those together because they are a bit similar to trades, not completely. Depends on the how large the range is. But let's look at that. Inside day is one of my favorite signal days, and I still trade it very closely. So inside day is a day that does not take either the low or the high of the previous day, and it's especially good if it's narrow. So sometimes you get even a multiple in a row, then it's even stronger. Day 0 means you have a fake out high, fake out low, peak formation high, peak formation low over 2 days or maybe on 1 day. It's better if it's narrow also, and then you are looking for a parabolic move on the next day. So this shows trapped traders on both sides of this range. And as we already seen in the last examples, then you are looking for either a false break reversal or a continuation. And you trade that typically from the outside. Only if it's very narrow and you get a very nice channel on the day, you might also take a parabolic trade from the inside away in one direction. But of course, you need to be very careful once you hit the extreme of the range and potentially already go out there, or then look for range expansions. So let's look at the chart. So now let's hunt inside days. That's gold price action over the last 3 weeks or so. Let's just look where inside days are. So here we have an inside day, a very fresh one, and you already see here false break on one side, reversing completely to the other side. So always if you hit one side, the money is on the other side. So you either get a trend trade or a reversal trade. So this was yesterday, a very nice inside day reversal running all day. Then here you see same situation, Monday this week. Here we had in Asia a false break of the low. Then it was reversing all day to take the money on the other side. And then what you typically do is that you look at the range expansion for the inside day. So if it's a breakout of the inside day, breakout trend, you always hunt for one full expansion. And here you see how it broke out and just went to the one full expansion to the other side. So here you had 2 trades in a row going all the way to the other side. Let's look at some more. Here is an inside day. Here you see a parabolic situation. So it was coiling in this inside day, and then you got a channel here blowing off in one direction. You can take this channel, but I would advise you to rather wait for it to break out. And you see here again one full expansion inside day, so that the trade is here from the breakout down to the one full expansion. Works out perfectly. Same logic here, inside day. You see they happen all the time. It's one of the really the best setups. You take one full expansion. Here you get the breakout. Here you get a retest, and then it goes all the way also to the one full expansion. Here, Friday, also an inside day. Let's also pull the one full expansion. Same logic. You see here it hits this level, and then London breaks out, goes to the one full expansion. Perfect trade. So you see here alone in the last 3 weeks we have 1, 2, 3, 4, 5 inside day trades. It's really one of the best setups, and they are very reliable. You just need to be sure, looking at timing, level, behavior of price. Once you break out, are you really in a trend situation or are you reversing? That's the thing to find out. But then once it's moving, you can be pretty sure that it's going all the way to the other side, and you can hold on to that very nicely. So day 0 example. So we are looking for peak formation high, failed breakout on one side of the daily range, and then a peak formation low on the other side, or the other way around. So here you see the first one would be here, peak formation low, peak formation high. This is then a range for the moment. We already seen this situation before. So on the next day, you might look at a parabolic channel, parabolic continuation, and you see you got that. What we are typically hunting for or looking at is a range expansion of peak formation high and low. So here this would be pretty far down, but you see here, as we already discussed, this is also a range overall. And if you get another peak formation low on this side, the situation, of course, changes again. So there you get another peak formation high, peak formation low, so it continues to coil. And what you then do is you take the range expansion again from the peak formation low to the peak formation high. And then you see we are again in our situation we have been before. So this is your range. This is your parabolic coil here, and then you get here the parabolic channel out of this coil, and it goes all the way to a one full expansion of this situation. So this is also something to look for. You of course have always have to be careful if it really goes all the way, but it's always nice to have these range expansions on the chart, and if the pattern on the day and the setups confirm, you can then be holding on comfortably to these range expansions. So this is peak formation high, peak formation low, day 0 across 2 days. So one day peak formation low, next day peak formation high. So the other situation would be an outside day. So peak formation high, peak formation low on the same day. So this is, for example, here, often this is coming after an inside day, obviously. So if you have an inside day that does an inside day reverse, the next day is an outside day. These outside days also often then result in a parabolic situation and going into one full range expansion. So this is peak formation high, peak formation low, and you see you get the next day you get a blow off after a nasty stop hunt. Then again you can look for your range expansions. In this case it didn't go all the way but pretty far, and then here you get the next combination, inside day, outside day. So we have another peak formation low, peak formation high. Then you can again take your range expansion, and you see here it just goes on with this parabolic move and goes on here to one full expansion. So again, here you see always good to look for these peak formations. It's always first a range. You need to be careful. You might trade the blow off from this range to the outside, especially if you look at the higher time frame bias. So I would never trade a reversal inside of these ranges, but if you get a blow off with a nice channel, then you might go on with a continuation. And then once you're breaking out and you see it's really leaving this range, then you always look next for a one full range expansion target. That's how you think about that. Signal day. It's the favorite one of most because it sounds the best and it's very easy, obviously, to spot. For me, it's my least favorite because it's the one that fails most, and it needs much more than just a first red or a first green day. I mean, Stacey always says, don't call every down day a first red day and every up day a first green day, but he never really explains what else you should really look for, at least not very specific. So what is the pattern and what is the setup with this signal? So preferably you have multiple days of pump or dump coming into high of week or low of week, what we've seen before. So you often want to have a combination of 3 days of breakouts and the first red, first green day. Then after this, the day shall close in the other direction, meaning that the last breakout traders at the high or low are pulled underwater overnight. So you have weak hands of traders that are sleeping all night in a red position, and the next day, guess what they are doing? If as soon as price comes back to their entry, they just go out of that trade. And this gives the impulse that might potentially push price to a rollover. So what are you looking for? Short long squeeze or parabolic reversal pattern. So you're looking for a pump and dump, dump and pump, or peak formation high, peak formation low, parabolic on the next day. You potentially have 3 levels of rise or fall, break and structure, engulfment. So pump and dump, dump and pump. And again, carefully, because potentially you are in a counter trend situation and you get in an uptrend, for example, you very often get a first red day that's just a reset for the next leg up. So you really need to look at the pattern on the day. What's the setup on the day? Is it really a reversal pattern, or is it just a trap reset continuation pattern? So let's look at that also on the chart. So here again, gold chart. This is again end of April. The situation we just had. Here you see multiple up pushing days. So 1 day of breakout, 2 days of breakout, 3, 4 days of breakout. And here you see the last breakout with a very nice peak formation high, closing red. So that's your first red day, closing at the extreme. And the next day, this is a bit tricky to trade, was a pump and dump continuation here in Asia, as you see. And then it was just a parabolic day pushing away. And here into New York, you got a low-hanging fruit continuation trade into the extreme of the day. So that's a classic first red day. This one here, in this case, a bit tricky to trade. But we also have a failed one here also. So you see here inside day breakout, day 2, day 3 in the week, Wednesday going all the way up, Friday, it was Thursday, closing as a first red day. So a weak peak formation high, closing as a first red day. But it's a pretty strong uptrend, and we are just only in 2 days of breakouts. So there you need to be a bit careful, also coming then into the next day. And there you see, I mean, you never got any short situation, never counter trend, a day one runner. It just pushed away, parabolic day here. So this was really just a short trap reset for the continuation long on the next day. So this is what you always have to keep in mind with the first red day. Never push it, and always keep both scenarios in mind for it. So here now again, gold, mid-March. I think we already looked at that situation. You have 1 day, 2 days, 3 days of breakdown shorts, 3 days of shorts in the market. Then you breaking back up here. So this is a day 1 3-day cycle. This is day 2 hitting the other side of the range, and this is a day that closes green after strong down push. So this is your first green day here, closing green. You also have this is a day 2. Then you come into day 3. This Tuesday is day 3. You are here in a daily breakout situation then, and then this is a first green day, day 3 continuation trades very nicely here in London. So this is what you're looking for, and you again see here that the signals are typically overlapping. So always zoom out and see, look at the combination of these different signals, step back, look at the pattern on the day, and then it might come to you and you will see what's the best thing to do. So stepping a bit back and looking at the bigger picture, what the basic patterns are. So for me, in the Stacey Burke system, there is 3 major setups, 3 major patterns you're looking for all the time. We have the reversal setups that everyone is hunting, the pump and dump, dump and pumps. The signal days for that are first red, first green day, and 3 days of longs and shorts. We just seen that. So pushing up, break in structure, peak formation high or low, and then the next day a rollover as a day 2 continuation trend trade after you got trapped traders at the low, at the high here, and profitable traders at the low. So you're punishing the trap at the high and taking the liquidity of the profitable traders at the low. That's how this works. Most of the people are hunting those. I don't. I rather hunt for those, but we are coming to that because those are pretty obvious and most people are going for that, and that's why they are very often failing and just doing one more leg up and then dump. So be careful with those, and I typically just trade the continuation of those. So the second one, very nice one, I trade that a lot. That's parabolic setups. So inside days, day 0, 3 days working into a level. So working into a level, coiling, and then from here, as we just seen in the examples, you either get a false break on one side and then range expansion, or it's just a parabolic channel on the day and then a range expansion. This can be out of a day, an inside day, or also peak formation high, peak formation low blow off, as we've seen. But those are the strongest and best setups because you typically get very explosive, fast moving price action, and this keeps you safe in your trades. Then my absolute favorite next to those, in combination of course also with those, are the continuation setups, low hanging fruit. And this is also what Stacey says all the time. We will come to the nuggets. In case of uncertainty, what you have most of the times actually, you rather look for low hanging fruit. Why? Because that's the trend trades. If you take a low hanging fruit trade, then it's already rolling over and you're just continuing what price is already showing you. Price shows you that it wants to go lower or higher, and you just wait for the low-hanging fruit pullback, and then you take the continuation. The good thing with that is that most people just don't do that, because most people are trading the reversals here, and we are just trading predominantly the low-hanging fruit, because people are trying to buy the low here. And if it's a nice rollover situation, you just take the liquidity of the people that are buying the low and you take the next leg down. So broken down markets, just look at market structure, multi-time frame bias, and take the continuations. And in this case here, I rarely take the reversal from this rollover here at the high, but I also take the low-hanging fruit continuation. So I rather wait for the first leg, for the first traders already completing their move here, and then they already start buying the low again for the next leg up potentially. And then I take, after I see the rollover, I take the continuation from here. So this is your playing field, and you always have to zoom out a bit and think, what is the pattern you're trading? And this pattern can be on all time frames. It can be within the session. So this can be hours, hour 1, hour 2, hour 3, hour 1, hour 2, hour 3, or it's sessions, session 1, session 2, session 3, or it's days. So always think about what is the time frame you are trading currently, and what's the pattern. And depending on that, you just have a scalp within a session, or it's a all-day runner into end of the day, from high of week to low of week. Then maybe looking at his major templates he's looking at. So this is, as we already also now discussed all the time, that's the major logic to locate the signals and setups. So you always think along the weekly template. So how does the week start? Monday is the open range. You check how is the open range trading in relation to the closing range. Friday's high and low. Then you might break down. That's bearish first. So my multi-time frame logic, I will show you later a bit more. It tracks always the buys according to the last level. So if you're breaking down here, you're first bearish. Then if it's coming back up, then you potentially have a day 1 3-day cycle. Fake out low. And from there, you're trading away from this trap and potentially looking for 3 pushes, 3 breakout longs in the other direction. So you always look at front side, back side. Front side is typically trending into the week, potentially after a fake out low. First green day, 3 days of shorts, maybe even. And then you might take long trades if you have dump and pump setups on the day into trending into midweek. From midweek, you're then careful. You might look for reversals. If you get then 3 days of longs, first red day, day 1 3-day cycle on the other side, back side of the week, then this might be the strongest reversal setups. Potentially, if you get a pump and dump template, and then after this break in structure, trend line, we've seen that coming into the backside of the week, the best trade often is then the continuation trade end of the week from the first red day continuing back to potentially the low of the week. So this is the cycle you're always looking at. There's of course a lot of variations of that, but Stacey always says day 1, day 2, day 3. So never counter trend a day 1 runner, day 2 trend. Then you come into midweek range. From there you count again. Day 1, you see a false break. Day 2 trend. Day 3 blow off. Day 1, day 2, day 3. So that's his major logic, and this is what you always have to keep in mind, how the week looks like and what's your weekly template. If you're interested to have a full video only discussing the weekly template, there I show also a lot of those variations. Then the next template to look at is the daily template. How does the day set up? We already seen this a bit. I always separate between long and short squeeze and parabolic setups. So you potentially get a pump and dump and pump reversal on the day. So if you're looking for a short, this might be a nice pattern that it's working back up, potentially into a level, or coming out of the level, trapping volume above this level. That's the deathline setup, trapping volume, and then potentially in New York, pulling this volume underwater and then trading away from it. Or 3 sessions of rise, 1, 2, 3. That's the same as 3 days of longs, for example, and then a rollover end of the day. The patterns are always the same across all time frames. And if you take a trade on the day, it's always good to reflect for a moment in which of those patterns might you be. Is it a pump and dump, or is it a parabolic template? And this is kind of especially the 2 options you need to separate, because you see already 3 sessions of rise, pump and dump reversal can be pretty close to a parabolic day, the black one here, a day that's just blows on with a parabolic channel into the end of the day and never looks back. So if you are counter trending that, you really want to see a clear break in structure and potentially a higher time frame bearish pressure. Otherwise, if you have a bullish pressure, you might rather look for low-hanging fruit continuation trades and do not counter trend that. This is what where people lose most of their money if they are in a parabolic day and they think it might need to come down. Maybe you had even a first red day on the day before, and then the next day just blows off to the top and they try to counter trend that all day and blow their account. So really look at the pattern. The parabolic patterns can be Asia peak formation high, London peak formation low. That's the same logic as we've seen on the day. Then you might get a parabolic channel in London or in New York going for a one full range expansion of this range, for example, or it's just going in one direction. So always step back, and before you take a trade, think about the daily template. How does the day set up? Where's the liquidity? Who is trapped? Are we going back to take longs that are in the money, or are we trapping traders working one side to blow off to the other side? Or is it that you're just pulling away from them and they are already trapped from the previous day at the low, for example? So always think about that. Who is trapped? That's the key to profitable trading. So this is what I collected over a long time, and I will go through this with you for a moment. This is just the nuggets. I mean, Stacey is really a pretty discretionary trader, and he sometimes struggles a bit to explain his system logically. I collected all these things, brought most of that in a structure in my personal playbook that's also available. You see this in the description box below. But here this was more or less the process where I collected the logic and also brought some of the rules that helped during trading in the day. So I separated those to what is my setup, so thesis generation, and also session scanning. If you are already following your shortlist pairs, do they confirm an entry or not? So let's go through those nuggets, those rules, because they helped me a lot to become even more profitable. So some rules, I just go through them. Do not counter trend on Mondays. So Monday often expands the range. Monday runners look for low-hanging fruit, look for continuation. Never counter trend anything on a Monday, especially not in a breakout. Very important. Then do not counter trend parabolic moves overall. If the market structure is still to the outside, you don't hit any level, especially if the move is coming out of New York. Do not fight that trend. Rather wait for a pullback and go into a continuation. This is what boosted my trading completely, that I burned into my mind. Do not counter trend all the time. Just look for continuation mainly, and only if it's really rolling over and showing clear weakness, then you might follow the reversal. But you don't pick the tops. That's very important. Never pick tops or bottoms, only if you have a very clear reason for that. Then same logic, especially on Wednesday and Friday, be very careful with counter trending. Rather look for the parabolic trend. Always look for the coils. Coils indicate the best setup. So if you have a coiling market, you know if it's moving out of this coils, you really get a range expansion and an explosive move. That's what you want to have for large trades in a short time. Careful with breakout trades overall. I mean, I take them pretty often now, but only if I really understand the pattern. So rather wait for a 3-push pullback, but this is still true. Don't be the first mouse. And if you're trading first mouse, then look at a range expansion of a lower time frame trade and just nail and bail. So wait for the 3 pushes out, maybe 3 5-minute bars, and then cut the trade. And then often you get a 3-push pullback and then the real move. So potentially what I'm currently doing is scalping early of the session very aggressively, and then from mid to end session I rather look for longer runners and potentially hold them much longer into the range expansions. Then this is very important. Look at how the session sets up. Breakouts before the session starts are pretty suspicious. They mostly revisit or reverse completely. Or look for 3 pushes out of the Asian range. So if you are already far out on the day, pump and dump template, then you might get a nice reversal in your session. Overall, for the day, always look for 3 levels of drop, consolidation, 3 levels of rise, consolidation. So pump, consolidation, lower low on the inside, dump. That's your major template for especially reversal trade. Do not counter-trend peak formations. So always look on the lower time frame. Where is your peak formations? In the sessions, at the extremes of the day, and then in the continuation. So if you see those peak formations, wait until you get a peak formation on the other side. So that's also not counter-trending. So if you are counter-trending a market, you have the peak formations in front of you. You want to have the peak formations in your favor, in your back. That's very important. If they extend the range, if you want to counter trend, check for a stop hunt. So really see how far you are outside already. Sometimes you get a nice stop hunt, 50 pip within 30 to 90 minutes outside of the range for a reversal, but don't push it. Then also, this was also important for me to learn, as long as you're inside of a daily, weekly high, don't counter trend that. Only look for trend trades. So if you're in a week, for example, and you did a fake out low, day 1, 3-day cycle potentially, then you trade away from this higher time frame peak formation, and you first and foremost stay in the trend with your bias and trade away from that. And only if you start to have like 3 days of longs from the low of the week, potentially you're looking to counter trend that and trade a reversal. But default is always you trade through the whole weekly range until you hit the other side. That's the default, unless you get a real nice reversal pattern on a specific day. But the default is always to continue. Then, if you get a confirmation for your setup, you think you have a confirmation, how do you confirm that? First, if you come into your session, that's session scanning. This is where most of my edge comes from, actually. So really step back, watch, wait, think, sit on your hands. First hour sets up. So don't take first hour trades. Really wait for the session to show its hand, to build up liquidity and to show a pattern. First hour is like Monday. Be careful. Do not counter trend anything. Wait for the pattern to develop. Think market behavior. Pump and dump, dump and pump. Also within the session. First hour, second hour, third hour. Where is the trap? What's the pattern? First hour often traps traders in the wrong direction, or in most cases. And then second hour might be the break in structure, or does a peak formation low in the other direction, and then you get a blow off, or you take the continuation in the third hour. Then very important, if they pump before a session or into the open, think dump. If they dump before a session or into the open, think pump. So this is always the first thinking. Pump or dump, or continuation. So if they pump into the open and then they continue, of course, this is then still first bullish before they reverse again. In case of uncertainty, as we already discussed, stick to low-hanging fruit. Very important. So this means take the continuations. Don't counter trend anything. Creeping trend, if you see that, be aware. It can blow off in the direction of the trend, or it squeezes and then does a explosive reversal move. If you see something like this, you know you will have a nice move in either direction. But really wait for the market to show its hand. If you have a creeping trend in a parabolic channel, you very often get a nasty stop hunt in one direction, just one wick, and then it blows off completely to the other side. Then, day 3 breakouts, they might continue as we've seen before after hitting stops. Very often you have 3 days of breakout, and then they pull back a bit, hit the stops, and then do another leg up. So be careful with that. Don't push the shorts against a day 3 of breakouts. Then how to identify a short squeeze. Very often, if you have also a creeping price action and you're coming into the session and you have a kind of 3 sessions working a low, for example, what you then see often, if timing is right, watch the clock, an ascending triangle. So it's just coils slightly upwards, coming potentially into the open or into a time rotation, and then it blows off. So watch for these ascending triangles if you're in parabolic situations. Then news trading a bit. If news wicks both sides, then give it time. This means that it takes all the liquidity that is on the chart, and then you just wait how it builds up liquidity again from this typically first hour, and then you trade the session setup. So first hour, second hour, third hour, and then if it looks nice, you take a trade. Other than that, you just wait and potentially do nothing because the setup is taken. There's no liquidity in the lower time frames anymore. On day 2s, you might get first bar news trades. I don't take them anymore because it's not worth the risk. But if you have a day 2 and your setup is already confirmed, then you might just take a first bar news continuation trade because it often traps volume immediately and you just take the continuation. What I typically do if I see something like this, I let them trap it, and then I still take the first bounce, or even just wait into the third hour and then take the continuation trade away from that late in the session. That's still good enough. On no news days, last nugget, allow for earlier entries if setups present. So if there is no news, be aware that it might move early. Don't push it. It's still better to wait for third hour typically, but sometimes then you get early moves that follow through. I would not recommend to hunt those too much, especially if you're not experienced yet. For non-experienced trader, I really would recommend to wait for the late session trades, because then most of the other traders are wrecked. You see the pattern and you just take your continuation trade and you will be fine. So how does the trading process look like? It's very important that you have a daily routine, and if you trade the Stacey Burke system, you have a very clear process that you follow every day. So the first question you have is, do you have a setup? So before the session, you're screening the charts as we've done before, and you look for your signal days. So you really check, do you have 3 days of longs, first red day, inside days? So these make you interested. Then you check days of the week. So how is the weekly template looking? Are you on a Wednesday, Thursday, potentially for better moves? And what I also look at on top of that, that's also taken from his ACB templates, it's closes in breakout. So that's a very simple signal also. So it's always good to look at days that closed in breakout, because this signals you that it's out of balance and that you get even a stronger move on the next day. So this build out of these things here, build your filter criteria to build up your short list. So my major criteria here, also with my new system, is inside days and closes in breakout. Closes in breakout also a bit more complicated. So if you have like 3 days close in breakout in one direction at the high or low extreme of the month, for example. So if you're interested in that, I also have a video on my 5-star setups. There I explain this in detail. But here for yourself, define criteria, what you're looking for. For example, closes in breakout and inside days. That's a very nice logic, and those you then look at in depth coming into your session. Define your short list. That does not more than maybe 3 pairs, I would say. So screen your basket, maybe have 10 pairs in your basket, boil it down to 2 or 3 in the session. Then in the session, coming into the open, these are the questions you want to answer for yourself. What's the setup on the day, as we just discussed? Always think about that. Are we up high or down low? Is it a pump and dump and pump, or is it parabolic? where's the money? So who is in the money? Who is trapped? Very important. I also have a video on that if you want to look at this. Then do we have a higher high, lower low on the inside? I don't do that a lot, but if you're trading Stacey Burke purely, this is one of his major signals. And then potentially, do you have a parabolic channel? And always think about these things and check it with your setup. Does this fit together? So if you have a 3 days of longs, pump and dump reversal, what is the setup on the day you want to look for? You know, another also a potential pump and dump on the day, or a parabolic continuation. If you have a parabolic continuation, what is it that you want to see? Lower low on the inside, is it a parabolic channel? Do you wait for the stop hunt? And so on. And then if you like that, then you're looking for an entry. But this entry, you also have confirmation for the entry. So you have thesis generation, you have session screening, and then you have entry screening. So you go down to one pair, you go from, I typically do this on a 1 hour time frame, this is 15-minute time frame, this is 5-minute time frame. On the 5-minute time frame, you watch one pair especially, and you check what is the time. You look for time rotations. So you always look to enter around a 15, 30-minute or better 1 hour time rotation. So you always let these time rotations hit, and then you let the market show its hand. Timing, levels, behavior of price, always. So look at timing. Where are your levels? So where is the previous day high, low, and close especially? You want to trade from those levels. And then you check, do you get an engulfment candle? Do you have accelerating price action? And this is Stacey's universal entry criteria. I look at this a bit also. It's not too bad. A 20 EMA cross. On the 5-minute, you really want to cross the 20 EMA. You can also use the EMA coil with the other EMAs and see that the whole coil is behind you. Then you can be pretty sure that the market is rolling over and that you get a nice trade from that. So this is, put it on your wall and do this every day. Thesis generation, what are your signals? What could be the setup? Does your setup confirm? Then if the setup confirms, don't push it still. Do you get an entry? What's the time? Is it really accelerating, rolling over? Do you get a pin hammer potentially? And is it crossing the EMA? And then you might go for the trade. So, as a summary, before we then go a bit deeper into the specific setups, one more, and also some critique from my side. So if you bring it all together, what we've seen is how Stacey thinks about it. Price is always in a box. That's the most important thing. So the box is on a couple of time frames. I always bring this down even stronger. So I'm looking almost all time frames. He's mainly looking at the daily, weekly time frame. So what is your box? What's the consolidation? And then trade away from the box or trade the range of the box. Then our other time frame traders driving, very important. So you always zoom out and look at the week, especially for that. So are you coming out of a fake out low or high of the previous week's range, or are you in a breakout of the previous week's range? Then you can be pretty sure that other time frame traders are driving the move in one direction, and then you're following that on the lower time frame. So the daily breakouts show you that this trend goes on until it doesn't. But if you don't get a break in structure or weakness, then you don't counter trend anything yet. Then who is trapped? You always check in the chart who is trapped. So where is the peak formations on all time frames? On the previous week's levels, as we just seen, and then trading away from that on the daily levels, but also on the lower time frame in the sessions and so on. Look for trapped traders because you can be pretty sure that they will be punished, and don't be trapped yourself. So don't do anything unless you see someone else is trapped. Then what is your setup? So really be specific. What setup are you hunting? Write it down. What is it that you're hunting for? How do you do that? What is it that you're that you want to see in the chart. As long as you don't define that, you will always do stupid stuff in front of the screen in lifetime. Over trading, revenge trading, it's all a symptom of you not being specific what you're looking for. So be very specific what you're doing, when are you doing it, and how are you doing it. Then you will be fine. Then always think about that. Timings, levels, behavior of price. That's the rhythm. You look at the timing, what's the clock? Look at the time rotations. Then if you like it, where are the levels? Don't trade in any level into any level. See that the range is large enough that you have asymmetrical risk reward. And then look at behavior of price. Are you breaking out? Are you reversing? Where are the wicks? Who is trapped? Where is a pin hammer potentially, engulfing candles, and so on. And then most importantly, sit on your hands. Unless you understand what's happening there and don't try to understand everything. Most people try to understand all moves in the market. You don't need to do that. Most of the stuff is random. You sit on your hands until you understand something. That's enough. If you understand your setup and it occurs, then you take the trade and you just ignore everything else. That's the logic. So, what are the issues with this system? I really love the system. It's really great, and I trade it since a long time, but it's tricky also, and many people are struggling with it because, I mean, it's always easily said, day 1, day 2, day 3, keep it simple. Once you see it, you cannot unsee it, and so on. But it's a very discretionary system. And this makes it tricky at the beginning because you don't know especially or specifically what you're looking for, and then you try to, you think you understood something, you see a first red day, and you just try to short all day and get destroyed. So this is what my critique on the system is, especially that it animates you to counter trend, because most of the signals are counter trend signals. So he doesn't push the day 2, day 3 trend too much. And he says he loves the low-hanging fruit, but he doesn't explain it very well when and how to take those. So most people are going for the easy signals, first red day, 3 days of longs, and then they counter trend and then they get destroyed. Then also the setups are not clearly defined. He talks about the signals a lot, and they are nice, but then he says just the day needs to set up. But how? What I've showed you before, this is not very nicely explained by Stacey. How does the day need to set up? And I defined all these setups very deeply on the day. What are the options? And then I defined my system, the trend predator and the multi-time frame system, because it tracks the setup on the day automatically for you. I will show you this later also. And then the entries are not very mechanical. So only EMA cross and pin hammers, and so you get a lot of false positives with those in the wrong direction. So I also reworked this entry logic completely for myself, and I think many people that try to trade the system struggle, especially with entries. How did I enhance his system? So based on the challenges, the issues I just explained, also coming out of my teaching where I've seen where most people are struggling, I evolved the system and added a lot of things that especially address those. So I started off as defining the setups more deeply. So really defining the detailed setups, not only the signals, but strongly go into details. I will show you now also some of the setups in detail, how it also relates to the setup on the day and how to trade those much more specifically. I also, before I even developed my multi-time frame system, I made his system much more mechanical in comparison to his teachings. So in my playbook you find the mechanical process for that already. Then I introduced the multi-time frame system, so really tracking the bias across all time frames. I will show you that. So looking at the breakout, breakdown, fake out high, fake out low, or inside bars on all time frames. So this really shows you where the trend is going and what the other time frame traders are doing especially. Then I developed my trend predator indicators. There is 3 of those, one for the lower time frames to confirm entries, and one especially for the setups. Trend Predator Pro, it reads the bias across all time frames and indicates you the context and the specific setups where you then look for specific entries. Then I defined my own process for entries, the open box strategy. There's also a video on that. I also evolved it and will soon bring another video with even more enhancements. This is more or less an open range strategy within the session. So you let the equity open hit the first 30 minutes where most of the volume comes in, and then you trade a breakout, fake out away from this open box. And this you compare with your higher time frame setup and your signals. And if you do this right, you have a very, very strong mechanical and profitable system. Then I defined a trading system structure. So what is a trading system? I defined those, and also for my students, this framework, this logic helps you to define your personal system. What are your setups? What's your process? How do you journal? And so on. What are you looking for? There's a logic how to define that. And once you define that, you will really stick to these things, and also psychology will be much easier to be handled. So this is what I did to his system, and I enhanced it. And now let's go through the individual setups, signals, his classic ones, and how I also traded with my new enhancements. Go through them in the same sequence as we discussed them before. So let's start off with 3 days of longs. So as we discussed, we're looking for price breaking out of the daily range to the top, hitting previous day high 3 times in a row without hitting the other side, meaning we have weak hands of profitable traders in the market and hunting their stops on the other side, and potentially also trap even more traders at the long. So what are you looking for? You're checking where is previous week's high. So how is the previous week's range? So you really want to be hitting the previous week's level or be at the high of the range. So just to be aware of it. You want the higher time frames to be bearish. So meaning you don't want to come out of a strong weekly fake out low. You prefer to be in a weekly breakdown, also in the monthly. So a downtrend is better because then you have a rollover back into the trend. If it's a strong uptrend, so in a weekly breakout, monthly breakout, then you want to be careful with counter trending that. You still might get at the end of the week strong rollovers sometimes, but you need to be careful once the bullish pressure is still pretty strong. Then Stacey talks about this not too much. This is part of my multi-time frame logic. I look at the daily bias. So if we have the last breakout, I typically don't short in as long as I am above this daily breakout level. So only if you have like 3 sessions of rise on the day and enough space already for your trade to be taken down to the previous day's high, then it might be fine. Otherwise, I would wait for the daily level to be lost and take it from here with an entry, or even wait for the low-hanging fruit as it breaks down through the low of the day, going into a range expansion, going all the way to the previous day low. So what are your confirming factors? You're watching the previous month, previous week's level. So are other time frame traders in the market and pushing? You don't want to be in daily or weekly breakout, as we just discussed. Only if you're very far up, you're checking the trend line. Is it broken? So here, do your trend line, and you don't pick the top then. So you really want to crossing the trend line that you're sure you are on the backside. Potentially, it can be day 3-day cycle, and you definitely check if you have enough space below to previous week low, weekly low, previous week close. So where is the next levels? Do you have enough space for your trade? Then set up on the day. You want to have 3 levels of rise, pump and dump into your session for a long squeeze, for example. Or peak formation low, peak formation high, blow off. We've seen that. 3 sessions working into a high here for your long squeeze could be. trading below or from previous day close. So closing price, important. Don't trade into it. Either you have enough space to closing price or you trade away from it. And then potentially lower low on the inside if it's not a fake out low. So this is for you to look at. Challenges, as we discussed, counter trending. So be careful that you are on the backside. Often this occurs, of course, in a strongly trending markets, especially if you look at the last weeks. The indices, for example, they just didn't come back. They just, I think DAX, for example, the German index here has like, I don't know, 10 breakout days in a row. Insane. So don't counter trend that unless you really get a clear break in structure and a sign of weakness. So let's look at the chart, how this can look like. So here now a specific trade situation. First, again, on the 1 hour to show you how this presents itself. And then we go one level deeper. Here, 3 days of longs, inside day, breakout, first day 1, breakout day 2, breakout day 3, and then we get another breakout here into this Tuesday. So it's even 4 days of breakouts. That's fine. We talked about that. So here we didn't get any sign of reversal. Then we are coming here into the day, and you see Asia pushing up, then London printing a peak formation high, and then it's rolling over. There is the peak formation, and then you get another peak formation into the New York session. And as we discussed just before, here's previous day high. This is also was trend predator here. Shows you this is the daily fake out high. As soon as we lose this level, this becomes bearish. And we also track the lower time frames. And here in this table, you see the bias. So we have breakout on month and week. We have fake out on the day and breakdowns on the lower time frames. And this is why we then are interested in the trade. So let's look on the 5 minute. If we go to the 5 minute, we see especially how this presents coming into the trading window. It's a bit of a late situation, but I still liked it as an example. Let's see how this presents itself. If we clean this up a bit, you see here again how London traded. So this is coming into London. This is the London trading window with the peak formation high rolling over. This is your daily fake out high that you want to lose. Then you see here my open box. The purple box is the 30 minutes after the open. This is the box I'm looking at. So I want to have a range trade within this box or a breakout trade typically. And here I already marked it. We always look then for a breakout of this box and the one full expansion as a first target. So here is he trend predator telling you reversal situation in an overextended counter trend market, but it's still fine because it's rolling over with all the time frames, all the lower time frames bearish, and the 3 days of longs on the day. So here we also have the Stacey Burke signals in this trend predator multi-time frame table. So here I am interested once it breaks down, as we said. So I put my thesis here and then I scan within the session for time rotations and what it does. And as soon as we are inside, or as long as we are inside the open box, I don't do anything. Typically I don't trade that late anymore, but I think it's still a valid situation to show. Let's let it run a bit. Then we're coming here into the 1 hour rotation. After the 1 hour rotation, the 15 one is the very nice one for a trade. And you see here you get a breakdown. And then you really see that it's rolling over and going into a range expansion of this open box. Then you place your one full expansion down here. This is your trade. It's 300 pips. Depends on how you place your stop here. You have at least an R4 or R5 trade. and you see you just let it run a bit and it hits take profit already after half an hour, and that's it then. So really be patient, wait for the bias to show its hand, look at the open box. We can also look at the 20 EMA, what Stacey typically does, and you see here how it works into this 20 EMA. So it was already confirmed for Stacey, so Stacey would potentially go already in here. I mean, you also could do this with the 1 hour time rotations, all time frames bearish. So as soon as it did this stop hunt and came back in through the EMA, you could take it. I typically go for the continuation after the open box breaks down and then take the one full expansion, and that's the target, and you see how nicely this is respected. So this could be a very nice 3 days of longs continuation trade. Next signal, days 2, day 3 trend. These are some of my best and most favorite trades. I don't look at them with the day count too much, but in overall parabolic aligned multi-time frame situations, I love to take those. So if you're coming potentially out of a day 1 3-day cycle, day 2 trend, day 3 blow off, you look at the higher time frames with trend predator. Potentially are the higher time frames aligning bullishly, so weak fake out low, weak breakout, and so on. How is your previous week's range looking? Are you still inside? Do you have enough room to trade inside the range, or are you hitting a level, or are you just coming out of a breakout, for example? Then you check the daily bias, so you want to be in breakout either from the day before or on the day with a low-hanging fruit. You don't want to be overextended, so do not do that, or be very careful once it's already in a 3 days of longs again. So it's better once you are in the first or in the second breakout, and as discussed, potentially a day 3 3-day cycle, because then the chance for a blow off is even stronger. Confirming factors, so we potentially looking at other time frames driving, as we said, higher time frames aligning, and the level, the weekly level especially triggered. Look at the weekly bias. You could have a multi-day parabolic channel. That's nice for such a trade. You want to be above previous week close. That's then even better. And you want to have a nice and unbroken trend line. So you want to be on the front side with this trade. Setup on the day, parabolic breakout with time rotations, peak formation high, peak formation low, consolidation blow off is a nice one. 3 sessions working into low of the day for a short squeeze. You want to trade away from previous day close, as discussed. Higher high on the inside with a dump and pump setup is nice, or a parabolic channel. So that's again the setup on the day. And then common issues with those typically that people don't take that. So they are counter trending that. They are shorting the high here and they are missing the parabolic long. That's the typical mistake. So if you have such a parabolic situation, just go long. Don't short it here and try to fight the trend. So let's look at the chart. So here a situation we've been looking at already before. We have 3 days of shorts. Day 1 3-day cycle confirmed here by hitting the other side. Day 1, day 2 trend. So you see here we could also put the trend line here. We're coming to the backside of the whole move, and then we are going for the continuation of this trade. We're going on the lower time frames. Let's go on the 5 minutes. There you see how the day sets up. Asia peak formation high, London peak formation low, and now we are in a parabolic continuation channel. You can also mark that a bit. This is what it looks like. So you already have your pattern, and then you come into the session, look on the lower time frames. You see here that's your daily fake out low level down here. So the day is bullish. Here is the 4 hour and the 8 hour breakout level. and this here is the weekly level. They are all green and behind you. This is a very nice situation from concerning the multi-time frame bias, and you see here all time frames already bullish. Reversal continuation into uptrend as context. The setup is a previous fake out low. That's the day one. Continuation, trend trades, 2 stars. You have the open box here, and we're coming into third hour, my favorite moment. Everything is already bullish, and then you get here a nice green switch candle indicated by my fake out highlighter. That's trend predator fake out. And you see the open box, there is no fake out high. So we might already take it from here, or if you are conservative, you could take the breakout of the open box. And then you go for one full expansion up here, and just put your take profit there and let it run. Let's see what it does. It's coming up here, and you see breaking out here with the 15-minute rotation, pushing up, pulling back a bit into the daily breakout level, and then going all the way to open box, one full expansion. That's a classic day 2 trend trade, how it presents on the chart and how I would also trade it with my tools. Let's look at the EMA. Maybe you see here, this would also have been helping you breaking away from the EMA, back testing here, retesting it, and then you already are sure you are on the right side of the EMA and just take the trend trade. That's the day 2, day 3 trend if it presents. Inside day. So we discussed a lot inside day already. Coiling, we have a compression here, trap traders on both sides. What are we looking for? We're looking for a false break reversal going to the other side of the inside day, or an inside day trend trade. What are the signals we're looking at? We might have even a first red day at the same time. We've seen this situation also before already. It might be a 3 days of longs. We are looking at the higher time frames. They might be bearish. You look at the daily bias. So really check if you're losing this level, for example, for a reversal, or are below this level for a low-hanging fruit continuation. And again, you check where is previous week's high, how does the previous week's range look like, are you trading into any of these levels, and do you have enough space for your trade to run. Confirming factors, inside day triggered on one side and reversing. You might have a parabolic channel for very often with the inside day. You look at the weekly cycle, you check overall if other time frame traders are in the market, weekly, monthly level hit. Setup on the day, narrow coil, working a high for a blow off could be nice. Clear breakdown or reversal from the level with major time rotations. That's the key for the inside day. So really check the previous day high and low and how it reacts there. Timing levels, behavior of price. Then potentially a parabolic channel with a stop hunt. And you again check where are you concerning previous day close. Per definition, if you're trading a reversal, you typically need to trade through previous day close. So it's always good to already have enough space until you reach it to move to break even, or are in that you have a nice entry compared to that. Common issues, counter trending parabolic moves. So if you're trading outside the inside day, never trade back into it. Be very careful unless you're coming back into the range. Or often counter trending or inside. So if you're trading inside the inside day, you might bet on a blow off, but never trade a reversal within the range of the inside day. That typically doesn't work out. So if there is a trade to be had, then it's a continuation trade from the inside with a parabolic channel and blow off. So let's look at the chart. So now inside day situation on the chart. You see here Monday closed as an inside day. If we look at the higher time frame bias, we see here was a breakdown on the week. And then this is your critical weekly level. The day then did a fake out low here in Asia off the weekly closing price. So that's pretty interesting that we are already above weekly closing price. And then after a fake out low, you obviously look for rotation to the other side of the range, and then if it breaks further out, you go for a one full expansion that would be up here at the monthly closing price. So this is always nice once it is aligning like this. So let's look at the lower time frames, how they present. Here you see London session. So Asia did the fake out low, retesting the weekly closing price. Then London session traded open box. So London session open box from 9 Central European time to 9:30. You see the daily fake out low is here. The 4-hour fake out low is here. The 8-hour fake out low level is here. So you want all those in your back. This is all green. And then you are breaking out of the open box here with 9:35. You can wait for a retest or just take it from there, and then target the other side of the range. You see Trend Predator tells you reversal situation, fake out low, continuation low of day. It's an inside day with a weekly bias in your favor. So then here with the breakout, you take the trade, just place your stop loss and take profit on the other side. You see here it does a retest of the first hour high. This can be a re-entry or a continuation entry, and then you just hold on to these trades and place your stop and the target on the other side of the range. You see it's running then often all the way into the New York session. New York session here hits take profits, 300 pips R7. Very, very nice trade. Here I would take profit typically, because then it might just rotate back in again. So this is your daily fake out high level then. So once it loses this is first bearish. But then we are coming into the New York session. It's pulling back as most of the times, and then you get here your new open box. It's just breaking out, inside day breakout. So anywhere here you can go into such a breakout trade. Target then is one full expansion of the inside day, and then again you would just let it run, and it grinds up a bit, and then I think a bit later in the session finally does the last leg up. I wouldn't always wait for that. You can also take profit somewhere in here, but you see that this is pretty reliable, and in the end it typically reaches this one full expansion of the inside day. So that's a very nice, just recent inside day trade. If you get those trades, think about it. This can be your whole month, or if you play it right, it can be your whole year even. Just a red day. So we discussed this a lot now, so let's make it quick. You want to have a push day into a peak formation high, potentially day 1, 3-day cycle, closing bearishly, pulling those traders underwater. You're watching this daily bias, so you don't want to short above this daily breakout level, the last one. You check if the higher time frames are potentially bearish. If they are bullish, you want to be as overextended as possible. So it's good if you have 3 days of longs at the same time. This could be a day 1, 3-day cycle, then also confirming, and you check the previous week range again, of course. Then you potentially go into this trade here, losing the daily level or as a low-hanging fruit. That's the options for that. Confirming factors, similar to the other ones. Day 1, 3-day cycle is nice that you come into a day 2 here. If it's a false break at the high of the week, you hit also previous week's high here at the same time, and you have then other time frame traders in the market. You don't want to take the short in a daily or in a weekly breakout unless you're very far up. You want to have enough space to previous week's low, weekly low, previous week close. It's nice if you have 3 days of longs at the same time, maybe 3 pushes out of the opening range of the week, or a day 3 at the same time. Set up on the day 3 levels of rise potentially, pump and dump into the session, peak formation high, peak formation low, consolidation blow off could be 3 sessions working into a high. You want to have previous day close in your back, and a lower low on the inside could be nice. Common issues, as discussed, counter trending. So if this is a strong uptrend, then be careful, because this often fails as a signal, and potentially if this pulls back, it can be just a reset for the next leg up. So reset day 1, 3-day cycle. Sometimes if this makes a very nice peak formation, then you are looking for a day 2, day 3 again as a next leg up. That's the situation. Let's look at an example. So here now, first red day situation. You have here 2 very nice and strong pump days. One day that's closing below the open, first red day, you see it here, and it's even also an inside day, so that's pretty nice. Then you are coming here into the day. London does a lower low already, so London already gave a or Asia already gave a short trade. Here is your weekly level, so it's nice if you are trading below that, because then you have the day and the week in your favor, and you also trading then away from this inside day as a trend trade. So let's look at the lower time frame, how this presents. Here you see the lower low in London. So this is the low of the day, then it pushing back up 3 levels of rise. That's pretty nice. And then you come into the New York session. The New York session retests closing price. Perfect. You have here the daily breakdown level and here the weekly level. You want to have those 2 in your back. And then you just wait again what the open box does. It's trading around that here above the weekly level. So here you don't get an entry. But as soon as it loses the weekly level here, then you have all time frames aligning. You're coming here into the 30-minute time rotation, which can be a nice entry, and then you just place your take profit here at the low of the day. And then you see here also breakdown continuation, low-hanging fruit. You have first red day signal here, all lower time frames bearish. Day in breakdown out of an inside day, week fake out high. Month is bullish, but that's fine then. So then you just place your stop and your take profit at the low of the day, and you see it's just blowing down, and after 300 pips it reaching the low of the day, and you have a nice R6 plus trade after roughly an hour. So this would be a typical first red day low-hanging fruit pattern trade. I hope you liked it. If you like this thinking around trading and you want to look into that a bit deeper, there's a couple of ways to do that. You can go to my WOP. Following this link here, there is a free welcome document that describes the trading style a bit better. There is also a link to the free Discord community where we discuss this trading every day. There's a lot of free stuff on there and a lot of resources to look into. Then you have a lot of YouTube videos. It's a completely free trading course around my trading style. You can really look deeply into these videos. They explain every aspect of my trading style, and you can get very far with that. If you then want to go even deeper, there is a playbook available in the premium channel where I update my subscribers with new ideas, and in the playbook you get all the details around my trading style with all the setups and more. And there is also mentoring available. So I do one-to-one coaching in a couple of different variations. So if you want to discuss and get some feedback and want direct coaching, I am available for that also. Then on the Trend Predator side, there is a free Trend Predator Fakeout, as I shown. That's the one that colors the candles. It's very helpful. You can just search for it on TradingView or go to my WAP and claim it there. And then there's 2 paid indicators that are also with a free trial of 30 days. It's the Trend Predator Essential that gives you all the analysis you need, and there's Trend Predator Pro that also flashes the signals and the context what I just showed you. This is more or less mirroring my complete trading style. I've coded all my setups, all my thinking into an indicator. I mean, it's not a real indicator, it's more a fully automated trading system. And if you have that, you can boil down your preparation to a couple of minutes because it shows you everything on the chart already. So thanks for listening. Reach out if you have any questions. If you liked the video, please click like, subscribe to the channel, and have a nice day.